Okay, let's just jump right into this. It is February 26, 2026, and if you've been anywhere near the business world lately, you keep hearing this one phrase tossed around, the experience economy.
Right. Yeah, it's everywhere.
It really is. And the whole idea is that people aren't buying stuff anymore.
Mhm.
They're buying moments. They're buying memories. And if you need definitive proof that the experience economy is not only alive, but absolutely thriving, you don't need to look any further than the earnings report that dropped yesterday from TKO Group Holdings.
It really is a fascinating document to read through
Yes.
because for a long time people looked at the components of this company, the UFC and WWE.
Those these sort of niche, slightly rowdy sports properties.
Exactly. Niche, maybe a bit fringe. But when you look at these Q4 and full year 2025 numbers, you aren't seeing a niche sport anymore. You are seeing a global media juggernaut that is arguably better positioned than almost anyone else in the entertainment sector right now.
Yeah, and the numbers are just huge, which we will get to in a minute. But the vibe of this call is different. For the last couple of years, the story with TKO has been all about the merger, the deal making, the rumors. It was always, who are they buying next, or how is this integration going to work? But yesterday, the message from management, specifically Ari Emanuel and Mark Shapiro, it was loud and clear. The deal making phase is done. We are done building the car. Now we're driving it. Welcome to the era of execution.
That is the key shift right there. They've spent the last 2 years assembling the machinery, locking in these massive media rights deals, integrating the teams, launching new ventures. And now, in 2026, they're turning the key. And the engine isn't just humming, it's roaring. They offered guidance for 2026 that frankly blew a lot of analysts away.
So for this deep dive, we're going to look at exactly how that engine works. We've got three main things to cover so you can really understand this execution era. First, we have to talk about what they're calling the step function change in revenue. Basically how they are making a massive leap in cash thanks to new deals with Netflix, Paramount, and ESPN.
Right. And then second, we're going to talk about FIPS.
FIPS,
Yeah.
which, I mean, it sounds like a candy or a disease, but it's actually a crucial piece of their business model now.
Yeah, it stands for Financial Incentive Packages, which is essentially corporate speak for governments paying hundreds of millions of dollars to host fights. It's a fascinating shift in how sports are monetized.
And finally, we have to talk about the White House, because TKO is planning an event on the South Lawn for America's 250th anniversary that is going to intentionally lose them a ton of money. So we need to explain why they think lighting millions of dollars on fire for a single event is actually a brilliant business move.
It sounds completely counterintuitive at first glance, but when you look at the strategy, it makes perfect sense.
Okay, well, let's start with the money, the step function. I was looking at the guidance they put out for 2026, and the jump is pretty staggering. They finished 2025 with, what, about $4.735 billion in revenue?
Yep, 4.735.
But for 2026, they are projecting between 5.675 and 5.775 billion. That is a billion-dollar jump in one single year.
It's massive. And usually when you see a company jump that much in revenue year over year, it's because they bought another company.
Right.
It's inorganic growth. But that's not what's happening here. This is purely organic growth, driven almost entirely by the fact that their new media rights deals have finally kicked in. They have secured over $15 billion in long-term rights.
15 billion. That's a lot of zeros. It's a safety net that most media companies would absolutely kill for right now.
It is. And the industrial logic here, as they call it, is that these are high-margin recurring revenue streams with annual escalators. So every year, the check gets bigger automatically. Yeah, it insulates them from market volatility. It insulates them from AI disruption, which is a big talking point right now.
Yeah.
You can't use AI to fake the drama of a live UFC knockout or a WrestleMania moment.
Right. You need the live humans in the ring. Let's dig into where that money is coming from specifically. The landscape for the fan has changed dramatically. The big one for UFC is the Paramount deal.
Correct. This is a huge shift in the consumer experience. Previously, if you were a UFC fan in the US, you were dealing with what they called a double paywall with ESPN+.
Oh man, the double paywall. It was so annoying. You had to pay for the subscription just to access the app, and then you had to pay again for the specific pay-per-view event.
Right, it created so much friction.
You felt like you were being nickel and dime just to watch the sport.
Exactly. So the new 7-year deal with Paramount changes the game completely. It makes the 43 annual UFC events available to all Paramount Plus subscribers as part of the base package. No more double dip.
And clearly, the fans were waiting for this. I saw that UFC 324, which was the debut on Paramount Plus, Drew near than 5 million streaming views.
Which was the largest exclusive live event in Paramount Plus history.
Incredible.
And more importantly, it was the broadest reach for a UFC event in nearly a decade. That is what happens when you remove friction for the consumer. You unlock this massive casual audience that maybe wasn't willing to jump through the ESPN Plus hoops or pay $80 for a pay-per-view, but they're already sitting there on Paramount watching movies or Yellowstone, and suddenly the UFC is right there.
It widens the funnel. You aren't just preaching to the converted anymore, you're converting the casuals.
Exactly.
Then you've got the WWE side of the house. We are 1 year into the Netflix era now. How is that looking?
It's looking like a total dominance play. They launched in January 2025. In the first year alone, 525 million hours of WWE content were streamed on Netflix.
525 million hours. That is just mind-boggling.
Oh, it really is. And the stat that really stood out to me from the report is that Raw is a top 10 show in over 30 countries every single week.
Every week.
Every week. It's not just a U.S. phenomenon anymore. It's a global anchor tenant for Netflix.
That concept of an anchor tenant is so important in the streaming wars right now. Netflix needs reasons for people not to churn, not to cancel their subscription. And a show that is on every single week, 52 weeks a year, with no off-season, that is the ultimate churn killer.
Precisely. It's appointment viewing in a world of on-demand. And we can't forget the other piece of the puzzle, which is the WWE deal with ESPN for the premium live events, or PLEs.
Right, big ones.
Yeah, that's a 5-year deal. It represents a 1.8x increase in value compared to the old deal. So across the board, UFC on Paramount, WWE on Netflix, PLEs on ESPN, they have successfully negotiated significantly higher fees while simultaneously increasing their reach. That is the very definition of the step function.
It's seriously impressive. They are charging more money to more partners for the same product.
Yeah.
And the partners are happy to pay it because they absolutely need the content. But here is where it gets really interesting for me. It's not just media companies paying them anymore. It's governments. We need to talk about these FIPs.
Yes. Mark Shapiro, the president and COO, made a big point of this on the earnings call. He said they're retiring the term site fees because it doesn't capture the full scope of what is actually happening. They're now calling them financial incentive packages.
I mean, normally when a corporation rebrands a fee to an incentive package, I just assume they're trying to hide something or spin a negative. But in this case, it seems like they're just describing a total new reality.
It sounds like corporate spin, but the distinction is actually very valid. A site fee implies someone is just writing a check to rent the building or bring the show to town. A financial incentive package is much more comprehensive. It includes cash, yes, but also non-cash subsidies, tax breaks, and value-in-kind support.
Value in kind meaning what exactly? Like
Yeah.
free police escorts?
Yeah, exactly that. Free marketing on city billboards, security costs covered by the local police force rather than the event organizer, logistics provided by the host city. It's the city effectively becoming a co-promoter of the event because they want the economic impact.
So how much money are we talking about here? Because I feel like this used to be a nice little bonus on top of ticket sales, but now it's becoming a massive line item.
It is absolutely becoming a main course. For 2026, they expect to realize over $300 million in value from these FIPs.
Wow.
Yeah, and they have a target to get that number up to between $380 million and $420 million by 2030.
Wait, $300 million just to host the events?
Yeah.
Before they sell a single ticket or a single hot dog?
Correct. They're targeting these packages for all 25 of their marquee events per year. And the logic from the government side, whether it's a city in the U.S. or a country like Saudi Arabia, is that these events are massive economic engines. They drive tourism, they drive hotel occupancy, and frankly, they drive cultural relevance.
Speaking of Saudi Arabia, that relationship seems to be deepening, right?
Yeah.
It's arguably the biggest source of these FIPs.
Significantly. In 2025, it was a bit quieter. Just due to scheduling, they only had one event there. But in 2026, WWE is holding 3 events in Saudi Arabia, including the Royal Rumble.
The Royal Rumble.
Yes.
That is one of the big 4 heritage events. That used to be sacred ground for American arenas.
And now it debuted in Riyadh. It creates this fascinating dynamic where the location of the sport is dictated by the highest bidder.
Right.
It's not just about where are the fans anymore, it's where is the government check.
It really changes the calculation.
Well, and that connects back to the revenue stability we talked about earlier. Ticket sales can fluctuate. Maybe a snowstorm hits and attendance drops. Merchandise sales can fluctuate. But a signed government contract for a $20 million incentive package.
Yeah, just locked in.
That is locked in. It's another layer of insulation for the business.
Okay, so they love making money. We've firmly established that. Which brings me to the absolute head-scratcher of the earnings call, the White House event.
The White House gamble.
Right. So let's just set the scene for you. June 14th, 2026. TKO is putting on a UFC event at the White House, literally on the South Lawn, to celebrate America's 250th anniversary, the semi-quincentennial.
It's a historic moment.
It sounds incredibly patriotic. It sounds huge. But then you look at the financials, and they explicitly stated on the call that they are going to lose money on this.
Yep.
The cost to build a stadium on the president's lawn is upwards of $60 million. They think they can offset about half of that, so maybe $30 million, through inventory sales. But that leaves a $30 million hole. Why would a company that is so focused on margins and execution voluntarily light $30 million on fire?
This is where you have to stop looking at TKO as just an event operator and start looking at them as a marketing machine. Management views that $30 million loss not as a loss, but as a customer acquisition cost. It's a strategic marketing investment.
Okay, sell me on it. What do they get for $30 million?
They get legitimacy. They get what they call Super Bowl-like earned media. Just think about the visuals for a second. The Octagon on the South Lawn, the Washington Monument in the background, the President of the United States likely in attendance, the global news coverage. You literally cannot buy that kind of ad space for $30 million.
That's a really good point. If you tried to buy $30 million worth of commercial time during the Super Bowl, you get maybe 4 minutes of airtime.
Exactly.
This gets them an entire week of news cycle dominance.
And remember their partner in all this, Paramount. This event is a massive funnel for subscriber acquisition. If millions of people tune in just to see the spectacle of people who maybe hate fighting but just want to see the White House event, they are entering the Paramount and UFC ecosystem.
I see.
It's a loss leader, designed to sample the product to a massive casual audience who might never tune in to a regular fight night in Vegas.
So it's treating a live sporting event almost like a Super Bowl commercial. You don't make money on the commercial itself. You make money on the brand lift and the subscribers you sign up afterwards.
Precisely. And it also cements their political capital. We were just talking about governments paying for events through FIPS. Well, playing nice with the U.S. government for the 250th anniversary, that is a pretty good way to ensure you're on the right side of regulators and policymakers.
That makes a lot of sense.
You aren't human cockfighting anymore, to use the old insult from the 90s when you are the centerpiece of the nation's birthday party.
Fair point. It is the ultimate mainstream validation. Now, while they're playing politics at the White House, they're also getting back into the ring in a different way. Zuffa Boxing.
Yes, this is one of the more intriguing new ventures they discussed. Zuffa Boxing launched just roughly a month ago in January 2026.
Now, for those who don't know, the UFC brass, Dana White specifically, has flirted with boxing for years. He has talked about it forever. But it always seemed like a total money pit. Boxing is notorious for having terrible economics. Promoters lose their shirts. Fighters demand insane purses. Fights fall through at the last minute. How is TKO doing this without wrecking their margins?
They are doing it by using someone else's money.
The absolute best way to do business.
Exactly. They aren't going it alone. They have partnered with Sela, which is a major financial backer and event management company. And the model they've set up is very clever. TKO manages the promotion, the production, the media rights. They've actually already got a deal with Paramount Plus for the US, Canada, and Latin America. But the financial risk? That's largely on Sela.
We saw a perfect example of this with the Conor Benn signing recently.
Right. TKO signed Conor Benn for a 2026 super fight. The reported purse is around $15 million. Now, in the old days, or in a traditional boxing model like Don King used to run, the promoter would have to front that cash and just pray the pay-per-view buys cover it.
Yeah, and if the fight flops, the promoter goes bankrupt.
It's incredibly high risk, high reward. But here, TKO explicitly stated that Sela is covering the purse. TKO isn't taking that $15 million hit to their balance sheet at all.
Wow.
They are essentially operating as the high-end service provider and rights holder, while the capital partner takes the risk on the athlete costs.
That is the execution story in a nutshell, isn't it? They are applying the UFC playbook, great production, centralized control, strong media deals, to boxing. But they've engineered out the biggest financial flaw of boxing, which is the purse bid.
It allows them to build a potential juggernaut. Mark Shapiro actually used that word, juggernaut, without exposing their shareholders to the volatility of the boxing market. It's incredibly smart financial engineering.
So let's zoom out a bit. We've got the media rights printing money. We've got government subsidizing the events through FIPS. We've got a risk-adjusted entry into boxing. What does this all mean for the shareholder? Ari Emanuel kept saying 2026 is about execution. What does that actually mean for the bottom line?
It means they are hyper-focused on efficiency and returning capital. There were a lot of rumors, there always are with Ari, that they were going to buy NASCAR or Formula One or some other massive asset.
Right, the empire-building phase. Everyone thought they were going to try to become the Disney of sports.
Ari shut that down completely. He said, "We aren't hunting. 2026 is about optimizing what they already have." And the financial health really reflects that. They announced a $1 billion share repurchase authorization.
That's huge.
They doubled the quarterly dividend in 2025. They are basically saying to the market, we have so much cash coming in, we're just going to give it back to you.
And what about the margins?
Expanding rapidly, they are projecting adjusted EBITDA margins to jump from about 33.5% in 2025 to nearly 40% in 2026. For a media and events company, hitting a 40% margin is elite. That is software company territory.
It really shows the power of scale. Once you have the infrastructure, the production trucks, the marketing teams, the licensing deals, adding more revenue doesn't necessarily add that much more cost.
Exactly. That's the beauty of the media rights escalators we mentioned earlier. If ESPN pays you 10% more this year than last year, your costs to produce the show didn't go up 10%. That extra money drops straight to the bottom line. And they're seeing growth in other areas, too. Global Partnerships is targeting $1.2 billion by 2030. They brought in partners like Meta, IBM, Polymarket.
Polymarket, the prediction market.
Yes, which makes perfect sense for sports betting and fan engagement. And let's not forget, On Location, their premium hospitality business. The FIFA World Cup is coming to North America in 2026, and TKO expects that alone to contribute about $75 million in adjusted EBITDA.
So it's a convergence of basically everything going right at the exact same time. The rights deals kick in, the World Cup happens, the government incentives ramp up, and the costs are controlled.
That's the perfect summary. TKO has successfully merged these two giants, UFC and WWE, and turned them into a cash-generating machine. They are entering 2026 with incredibly high visibility on their revenue. They know exactly where the money is coming from.
So what does this all mean for you, the listener? The person who might just be casually following this or maybe holds a little stock. Why does this matter beyond just a company is doing well?
I think for anyone trying to learn about business strategy, this is a masterclass in modern media leverage. TKO has completely flipped the script. They aren't begging for airtime. The streamers, Netflix and Paramount, they need TKO to survive the streaming wars. They aren't begging for venues either. Governments need them for tourism and legitimacy.
They've become the ultimate must-have asset.
Exactly. In a world where everything's fragmented and audiences are scattered across a million different apps, live sports, and specifically year-round live sports like UFC and WWE, are the only things that reliably aggregate large audiences. And TKO is charging a massive premium for that scarcity.
It really is remarkable to see how far they've come from the days of being considered fringe entertainment. They are arguably the most robust media stock on the market right now.
Absolutely. But, as I look at this whole landscape, the White House event, the Saudi deals, the massive government incentives, it raised a question that I think we should leave you with today.
Let's hear it.
If governments and private entities are increasingly subsidizing the costs of these events, if the FIPS become the main profit driver, does the true value of sports IP completely change?
What do you mean by that?
Well, does the value no longer lie in the ticket sales or the fans in the seats? Are the fans just the backdrop? Maybe the real value lies in the political and cultural capital these events provide to the highest bidder.
That is a fascinating thought. Are we watching a sport or are we watching a geopolitical transaction where the athletes are just the currency?
And is that White House event just the ultimate proof of that concept?
That is a very heavy thought.
Yeah.
On that note, we will let you mull that over. Thanks for joining us on this deep dive into TKO's earnings. We'll catch you on the next one.